It might be that you owe a lot of money. We've worked with people who do gain calculation for 3 or 4 years. One of those years, like say 2021, might have been very profitable, and but yet other years you lost money. You lost the assets. The value of the assets went down such that you really don't want to sell them to pay off the gains that have eroded on you in prior years. It's very problematic. The goal here is to get into compliance with the IRS, to no longer live in this fearful state of not being reporting to the IRS. How do we transition to that state? Do you go cold turkey, report everything, and take what comes? Well, that's one strategy. It's not the strategy everybody chooses. Some people take the strategy of, hey, I want to get current this year, but my prior years, I think I'll just wait and see if the IRS comes after me, and then I'll pay them those years. And we can do that with our service. We can actually monitor all your tax returns. We can see if the IRS ever flags one of them for an audit. And that gives us typically up to 6 months to fix your tax return before the audit begins. By doing that, you avoid the 20 to 40% accuracy penalty. So, that's a strategy a lot of people take. That strategy is basically, let's grow into compliance. You might not be able to pay off that 1 year, but you might be crossing your fingers that the IRS won't find you. And that's a personal risk. I mean, my advice always is to pay all your taxes, but I understand people have to make choices. And over time, you can grow into a place where you're comfortable and you feel compliant. Start by being compliant this year. Don't be paralyzed. Be compliant this year, even if you weren't in the past. And then next year, be compliant next year. Now you got 2 years of compliance under your belt. Then it'd be 3 years. It'd be 4 years, 4 to 6 years. Before you know it, those years, nobody's interested in them anymore. The IRS is not going to come after you for things that far back, because when we get to tax court, the judge looks really down on the IRS if they start producing data that's in the neighborhood of 10 years old type of thing. It's because it's impossible for the taxpayer to defend himself against these assertions. So first of all, if you want to be compliant, start moving towards compliant this year. Make this year the year you're compliant for this year. And then next year, do it again. And the next year, do it after that. Let's understand the risk that you have on prior years. Maybe you might want to amend some years. Maybe you want to hold off on amending those until maybe the risk is greater. But let's set a plan in place. And if you do find that you owe a lot of money, there are ways to spread the payments out over time. There's installment agreements where up to $250,000 of taxes can be spread out over 7 years for paying off. So basically using future money to pay off past taxes, not the best, but a lot of crypto traders say, I would do that. Most crypto traders have a high belief that the remaining assets they have will be of great value in a couple years, like 2025. So they're willing to hold out and hope for the best. If it turns out in 2025, nothing happens, you can't continue to pay your debt payments to the IRS, then we can renegotiate or seek an offer in compromise or some other debt resolution. I will say this about the IRS. They're pretty good in terms of being a debtor to pay to. The interest rate is not as high as credit card debt. So an installment agreement helps us get to that point without creating a lot of tension in your life. However, there's this one caveat. The IRS wants their money before anybody else. If you fail 2 payments with the IRS, you will not get another installment agreement with them again. They'll start coming to seize assets. And that's the difference with the IRS and all the credit card companies. Credit card companies can't come in and really seize your assets. The IRS, they can. Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. If you have tax questions that we can apply to, we will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn, or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.